It finally happened. Supermicro Computer is finally splitting their stock, which currently trades at over $600 a share, but as of October 1st, 2024, the stock will be undergoing a 10-for-1 split, so shares will be about $60 instead of $600. Despite the long-awaited stock split, which really doesn't affect the underlying business whatsoever, the stock is down 7% after earnings tonight, so I'm going to find out what is going on with Supermicro and why the stock is down. Really quick, if you're unfamiliar with Supermicro Computer, they have been a Wall Street darling recently during this whole AI boom. The stock saw a massive rally beginning in 2023 alongside Nvidia and actually soared as much as almost 300% in a matter of just a couple months in early 2024. At that point, Supermicro caught the attention of many investors, so if you are not new to the investing world, you likely have heard of Supermicro Computer. However, since that massive run-up, the stock has fallen around 50% and is down, like I said, 7% after hours. So we're going to find out what happened and whether the stock presents a buying opportunity today. Essentially, Supermicro is a hardware provider for data centers. Their specialty is in high-performance and high-efficiency servers. Now, if that makes you ask, what is a server? It's simply the computer that sits in a data somewhere that serves up the data to the end user. So when you use a cloud-based application, it's running on a server somewhere, being served to you via the internet and shows up on your own endpoint device. Supermicro makes these servers that run these applications. And as you can imagine, they are used plentifully in data centers. These servers, according to Supermicro, have proven quality and reliability and can accelerate the time to delivery to the end user. High-performance servers have lots of applications in the modern world, such as 5G, Internet of Things, edge computing, and of course, generative AI, which is what has caused the stock and the revenues to soar to the moon. Supermicro doesn't just sell computers, though. They also sell computer parts, such as motherboards, networking switches, accessories, and more. They also pride themselves on being as energy efficient as possible, and they design their computer parts to reduce power consumption as much as possible. All right, let's get into the earnings. Like I said, the stock is going to split 10-to-1, but this doesn't really impact anything. Essentially, there will be 10 times more shares outstanding, and the stock price will be 1/10 the price it was. So this doesn't affect anything about the actual company. It just makes it easier for smaller retail investors to buy shares. If you have a $5,000 portfolio, buying one share of Supermicro Computer would be over 10% of your portfolio. So for those smaller investors who have maybe less than a $10,000 portfolio, it's just not realistic to buy a single share of Supermicro. So after the split, they're hoping to make that easier on people. Hey, check it out. The stock is now down 9% after hours. All right, let's stop dilly-dallying and find out what happened. It should come as no surprise that they posted massive growth year over year for the quarter. Their quarterly revenue grew 143% year over year. It more than doubled. That's crazy. However, this massive revenue growth was unfortunately priced into the stock. What the market really cares about is the company's guidance. Now, the company uses a weird fiscal year, so technically this was the end of their fiscal year. It is about halfway through the year. So the next quarter, which they'll report in early November, maybe late October, is actually going to be Q1 of fiscal 2025. So for the next 4 quarters, we'll say, they're expecting revenue between $26 billion and $30 billion, which implies 74 to 101% year-over-year revenue growth. So at the high end, Supermicro is expecting to double their revenues this year after doubling their revenues in the previous year. Wow, talk about some massive demand for their products. Here we can see a graph from Supermicro that shows that they are growing substantially above the industry average, which makes sense. The industry is certainly not doubling and then doubling again. So Supermicro clearly has some superior products that are setting them apart from their competition. That would imply that they have some kind of moat. So if Supermicro Computer is growing so rapidly, why is the stock down after hours? This seems like a pretty great earnings report. Well, it's because analysts already knew Supermicro was going to grow rapidly. Supermicro's guidance actually missed analyst estimates. So it's clear that the market had very high expectations for this company, which is understandable given the massive run-up in price. That's probably a good time to talk about valuation. This is my spreadsheet where I evaluate growth stocks on 4 factors. Those factors are gross margins, annualized revenue, price to annualized sales, which is a measure of valuation, and year-over-year revenue growth. Supermicro Computer is actually one of the top scoring companies on my spreadsheet based on those 4 factors. Obviously, their triple-digit revenue growth is helping them out a ton, and their valuation is actually quite low on a price to annualized sales basis at just 1.8 times. For reference, the average of my entire spreadsheet is around 9, so to be at just under a quarter of that is quite cheap. But what we need to also consider is their gross margins. So price to annualized sales does not take into account earnings, it just takes into account revenue, the top line. So on their revenues of $21 billion per year, they have cost of revenues of 89%, which is incredibly high. So their gross margin is super low at just 11%. The bright side, however, is their SG&A, which is selling, general, and administrative, and R&D, which is research and development, together only make up less than 40% of that gross margin. So even though their gross margins are quite low, they are still able to turn a healthy profit. When we look at valuation metrics that do take into account profitability, we can see that the stock has a PE ratio of about 35, which is not terribly high considering the semiconductor industry does tend to have high PE ratios. And earnings are growing even faster than revenues, with net income growing almost 400% year over year in the previous quarter. So looking at valuation, I would hesitate to call Supermicro overvalued at this point. I wouldn't say that it's dirt cheap, but their valuation I think makes sense given this massive revenue growth and earnings growth, as well as future growth potential. When we look at Supermicro's earnings deck, they cite some future growth potentials, such as their total IT solutions, as well as, of course, the servers and storage systems that they're known for. They're also hoping to take advantage of the liquid cooling market, which is expected to be a huge growth driver, and according to this very almost vertical-looking green arrow, they expect to really take over in liquid cooling. And, of course, Supermicro has good relationships with some of the semiconductor giants in the industry, names like NVIDIA, Intel, Broadcom, and AMD. So I think it's hard to deny that Supermicro is a very impressive business. It's astounding to be able to grow their revenues by over 100% for 2 consecutive years, especially when they're selling hardware products. This isn't a software business where they have annual recurring revenue. This is a hardware company that is selling physical products. So this really speaks to the demand for data centers amidst the generative AI boom. Let's talk about some more fundamentals of the company, and then I'll let you know my thoughts and whether I'm planning to buy Supermicro stock. So free cash flows are quite sporadic for this company, but they are showing an upward trajectory, which I love to see. Cash is king, and free cash flows demonstrate the flexibility that a company has. Looking at Supermicro's updated balance sheet, I would say it is quite strong. Overall, we see total assets of almost 10 billion with total liabilities of less than 5 billion. So they have twice as many assets as liabilities. That's great. And when we look at their current ratio, their current assets make up most of their total assets. So their current ratio is exceptional, with only 2.4 billion in current liabilities and 9 billion in current assets. So a very strong balance sheet for Supermicro. To me, I find it strange that the stock is down 8% after hours. I really do. And we can see that initially in after hours trading, once the earnings were announced, the stock jumped almost 20% before falling back down to being flat and then dropping to be negative 8%. So the market's initial reaction to Supermicro's earnings were positive, which tells me that the market is really unpacking a lot here. The main reason I see for the stock dropping is, like I said, they did miss analyst estimates, as in the market was pricing in better guidance for the next quarter and for the 2025 fiscal year. So what do I think of Supermicro Computer, and is it a buy today? Well, let's start with the negatives. Like I said, free cash flow is a little all over the place, and their gross margins are awful at just 11%. The positives, they're growing extremely rapidly, and even though that growth will likely slow in the future, it's still planning to be triple digits for the next fiscal year. And then even though their gross margins are low, they are able to retain a lot of that gross profit and turn it into a net profit because of their low operating expenses. Additionally, they have a low valuation on a price to annualized sales basis, and they have a reasonable valuation on a PE basis. They're also a company that stands to benefit from a lot of upcoming tech trends, and I don't see the demand for their products going away anytime in the near future. I need to do a bit more research on Supermicro Computer stock, but I don't think it would be a bad one to buy, and I'm definitely going to be adding it to my watch list. If I do decide to buy the stock, I'll definitely let my YouTube members know. However, if you're on the sidelines and you're interested in this company, I don't think it would be a bad buy today with the drop, assuming it holds until the market opens tomorrow. So those are my thoughts on Supermicro. Overall, I am bullish, but I'd like to do a bit more research. If you liked this video, please hit the like button, and if you disliked it, please hit the dislike button and let me know what I can do to improve. Thank you guys so much for watching, and I hope you all have an amazing day. Oh, and please subscribe if you're new. Thank you.